the critical risks that you must address before you retire and then continue to address on an ongoing basis in retirement for confidence in your finances and your lifestyle. We'll talk about them today with John Kuykendall, founder, CEO of GulfCoast Financial Services. Of course, they are named Best of the Best 9 straight years and running by the readers of the Lake City Reporter for financial services. Been in the area serving proactive planning North Central Florida savers and investors for more than 31 years. So, John, you've seen a lot of these critical risks and have helped many people to formulate the plans to address them.
That's right, Peter. And today we've got 9 critical risks, and we're not going to go over all of them because it would take too much time. But you're more than welcome to call in, email us, let us know that you want it. We'll be glad to send you the list. And also a roadmap to retirement that I think is really very, very clear in all the things that we need to do for retirement. But, Peter, one of the most important things that we as retirees and we as people getting old enough to retire need to be concerned with this year, especially, is legislative risk. Because we've got an election coming up, politics can change we're going to see a certain amount of volatility between now and the election, but certainly after the election, parties change, things change. We get new legislators, new rules and laws, and a lot of things are going to be taking place for retirees. Social Security runs out of money in 2033. Medicare is getting close to running out of money about the same time. We've got new tax laws coming out. The list goes on and on and on of all the things that we as retirees need to be concerned about, because it's certainly going to affect our retirement.
When you talk about legislative risk to our retirement, then, John, you are basically talking about when and how the government can change the rules pertaining to certain things that we sort of depend on being the same throughout the retirement that we have planned around, but that, for lack of a better kind of analogy here, they can move the cheese at the end of the maze on us at certain points in time.
Well, that's right, Peter. And, a lot of people say, hey, they can't change. I'm grandfathered. But, there was a time during the Carter administration when we were running low on money, inflation was high, and Jimmy Carter came out with what they called notch Social Security. And he took 5 years, 5 different birth years, and said those people would get 75% of their Social Security, and they got that for life. So things can change. Government doesn't have to grandfather us, and we need to be ready and prepared for those legislative changes that are going to take place. And we need to be proactive in making sure that we address them as soon as we can.
And it doesn't seem like they tend to agree on much there. There's a lot of debate that we hear about and stalemates and therefore maybe we think, hey, things can't change. But John, there have been several sweeping law changes that have been put forth almost unanimously, I think with very, very little dissent. The Secure Act 2.0. So there are examples that we can point to where things do move forward, get done, that change the rules.
That's right. And the Secure Act, took place on January 1st of 2020. And there was no grandfathering. There was no time to get ready for it. They passed it in December, effective January 1st. Of the next year. So we couldn't react. We couldn't do things to plan for it. So we have to be ready for that. Things will happen. And the Secure Act certainly changed the way that beneficiaries received our inheritance.
Well, a critical risk that we need to plan and prepare for. It's just one of the 9 critical risks that you detail on this report. And ladies and gentlemen, if you would like a copy of this report of the 9 critical risks to plan for, pick up the phone, give GulfCoast Financial Services a call, 386-755-9018, 386-755-9018, or you can visit on their blog there on the website, gulfcoastfinancial.net, gulfcoastfinancial.net. And the next one that we wanted to cover, healthcare costs and long-term care, critical to plan and prepare for.
Well, healthcare costs are going up actually faster than inflation. And inflation historically is 3.8%. So, a 65-year-old can expect to spend about $12,000 a year in healthcare costs. But when you get to be 75, it goes up to $21,000 per year per person. And then when you're 85, it's 38,000 per person per year. And those are numbers that have been provided statistically. And so we have to be ready. Peter, if we're sitting there drawing Social Security and we're getting $40,000 combined with a couple of Social Security, and we don't have any pensions coming in, all of a sudden to be hit with $38,000 a year in healthcare costs, out of pocket healthcare costs, is a big number, and it can put a dent into our retirement income and to our disposable income that we're trying to live on.
Certainly. And John, statistics also show that many more people actually experience long-term care than do plan for it. I think it's something like 1 in 10 actually have a plan, have addressed the potential for long-term care, where the Department of Health and Human Service statistics, at least the most recent ones that I have seen, estimate that about 7 in 10 people experience the need for long-term care at some point in their life.
Well, that's right. And you got to remember that long-term care is not covered under Medicare. It's not covered by the government. So long-term care is going to have to be covered by the individual who has the resources and the ability to pay. Now, if you're on Medicaid, the government pays, but you don't get a choice in where you go, or you have to find a facility that does accept Medicaid. And Peter, right now, a healthcare worker cost is about $25 an hour. I just had a client call me a few minutes ago and tell me they're going to need $25,000 a month to cover the healthcare workers that are having to come in and take care of her husband. So, it's a lot of money that we have to worry about. There are things that we don't think about, and it will, you can always say, well, it's not going to happen to me. Let me just tell you, statistically, more and more people are needing it. More and more people are having to have it, and we have to plan and have a way to cover that as part of our financial planning, our income plan.
Now, John, there are kind of two sides to this too, because I have heard people talking about the desire to protect assets against the spend down requirements for Medicaid. If we do that, though, in the view and the eyes of the government, if we've got assets, then it's sort of up to us to pay for the level of care that we desire. Correct. But if we are taking proactive steps to protect assets from those spend down requirements, de facto, by making that statement, are we not saying that our plan is to depend on the government to set the level of care, because we are relying on Medicaid rather than self-funding and establishing our own care? And I guess part B to that question, if we do set assets aside and protect them, so to speak, air quotes there for anyone listening only on the podcast, protect them from the requirements for Medicaid spend down, is it not a requirement that basically we have made those assets relatively inaccessible for our own purposes? Like we've put a firewall up where we can't touch them?
Well, that's right, Peter. In Florida, we can, the house is not included in the state for Medicaid. And you can have, I think it's like $1,600, a wedding ring, a car, things like that, but everything else has to be spent down. So, the problem is that, one, how's the spouse going to survive if after you're gone, or how are you going to survive if you get out? Because, long-term care doesn't necessarily mean that I'm going to be in there forever. It means that I go in, I may rehab, and then I may come out. Medicare is not going to pay for my rehab. They're going to pay a certain percentage, but after that, it's up to me. And so, how am I going to survive if I spend all that money down and I can't touch it because I've invested it, put it back into the house, put it into the land, whatever, bought a new car that I can't drive. And, just in order to avoid Medicare costs, and to be able to get on Medicaid. Secondly, like I said, Medicaid doesn't give me the ability to decide where I'm going to go. Medicaid will take me wherever I can get into a Medicaid approved facility that has an opening. And so, my spouse or my family may have to drive 100 miles to see me. But, and so there's a lot of complications with that. And I think as citizens, we need to be ready to take care of ourselves. There is no insurance for this anymore. Long-term care statistically can't be underwritten. The insurance companies have proven that. So we need to be ready to take care of ourselves. And as you know, and we've talked on this show before, there are hybrid solutions where we can pick up some extra income and have some things covered with life insurance policies and annuities so that I can cover somewhat my long-term care cost.
Well, I think that everybody must address healthcare as part of their plan.
Yeah.
Having no plan is a plan for dependence, bottom
Yeah.
line. So just one of the 9 critical risks detailed in this report, ladies and gentlemen, that you must plan for a more confident, secure retirement. If you would like the list, the report of these 9 critical risks, pick up the phone, give Gulf Coast Financial Services a call, 386-755-9018, 386-755-9018. And as always, John does make the offer available to listeners, viewers of the podcast program that if you would like your detailed, your written, personal, financially focused income plan put together, that you can do that, no cost, no obligation, for the design of the plan, which will address all of the critical risks on this list from an income planning standpoint into and throughout retirement, including spousal income dependency, market volatility, taxation, and then another one of the ones that you wanted to hit on today in the program, John, one that we've seen an awful lot of: inflation. Now, just because we have seen this hit hard and heavy here recently doesn't mean that it's ever a factor that we can completely ignore when projecting out for decades into the future in retirement planning.
Well, that's right, Peter. One of the other risks is longevity. And so because of longevity, inflation plays more of a role into our retirement because, the average inflation rate is 3.8%. That's historical. Now, we've had some years higher than that and some years lower, but the average for the last, since we started calculating it, is 3.8, almost 4%. At that, every 18 years, my need for income is going to double. So if I need $100,000 now, in 18 years, I'm going to need 200. And in 9 years, I'm going to need 150,000. So, we have to be ready to handle inflation somehow, and it is taking its toll on our dollars. I mean, if you go to the grocery store, I went to the grocery store the other day and I love ice cream. And I used to be able to get 2 half gallons of this ice cream, 2 for $5. It's 2 for 10 now. So, that isn't a good example of inflation. Now, I can buy it, but the question is, in 18 years, that ice cream is going to be 2 for 20. Am I going to have $20 to buy it? Or am I going to want to?
The size has come down too. It's not quite the gallon that
that's
it
right.
used
They
to
give
be.
me less and they charge me more. And they figured out that way. I was talking to Brent this morning and he went to the beach and he said he had a modest continental breakfast at this place on the beach, and it was almost $40. And we were complaining about 21 at the restaurant we go to here in Lake City. So, it's just amazing the cost of things, the cost of goods, cost of clothes, cars. I mean, $100,000 for a pickup truck. Who would have thought that was the going rate? So, as we keep adding things, doing things, inflation goes up. Naturally, it goes up even if with just normally. So we have to be ready for it. We have to figure out how we're going to get increasing income, predictable, sustainable, income. And that's the reason we need the growth bucket, Peter, because in our income plan, we always have a growth bucket that we're going to let be in the market. We're going to be a little bit more aggressive with it, and we're going to try to grow it in order to be our hedge on inflation. And then our income coming in every month, if we can figure out a way to get a little bit more income coming in, naturally, then that helps us overall with not as much pain on the growth bucket. But those are the kind of things that we do with our income plan is we put in long inflation. We show you what's going to happen. We show you how much you're going to need in 20 years. And we show you how we're going to get that income, where you're going to get it, and how much we're going to have. And if we can't, then we'll show you, one, you've got to cut back on your spending, or two, we have to do a better job in saving.
Yeah, more critical risks that we must address. Yeah, that budget will help us to determine a lot of our future financial confidence and success, or lack thereof. But you need to put the plan together, ladies and gentlemen, especially as you are considering the transition, walking away from the paycheck earning years and then enjoying retirement. You're still going to need an income, and that's why you got to have that financially focused written retirement income plan addressing all 9 of these critical risks. And if you'd like to get that put together or review and evaluate your current plan, even if you're already retired, a great time to put a plan together because the interest rates are good. The payout rates, the income generation is beneficial and generous right now, maybe better than it's been in quite some time. So now is a time to take a look at how to structure that retirement income plan and address these critical risks. John and the team there at GulfCoast Financial Services here to show you how. And if you'd like to take advantage of that complimentary retirement planning review strategy session and to get that financially focused plan put together, pick up the phone, give a call, 386-755-9018, 386-755-9018. John, always a pleasure. Resources always available there at GulfCoastFinancial.net, GulfCoastFinancial.net online as well. But we appreciate you being here and covering these 9 critical risks.
Well, we appreciate that, Peter. We appreciate you for all you do for us. And Peter, we just got to say that, retirement's not for wimps. Quitting is for winners, but retirement's not for wimps. New book, come on by and pick it up.
They're also available at Gulf Coast Financial Services. You swing by the office, pick up a copy of Quitting is for Winners, Retirement's Not for Wimps. It is a fun, entertaining look at some of the issues that we do face and then how to address those. So if you would like a copy, give a call or swing by the office. Again, 386-755-9018. John, it is a great read, a fun read about some serious issues.
Very serious issues, things we have to be aware of, Peter.
Always a pleasure speaking with John Kuykendall, and give a call, swing by the office, visit online, GulfCoastFinancial.net, 386-755-9018. Once again, John, appreciate the time. Look forward to speaking with you soon.
Thank you, Peter. Great to be here. See you next week. Hey, if you'd like a copy of our new book, Quitting is for Winners, but Retirement's Not for Wimps, I encourage you to click the link below and get your copy today. Hey, we like it when you listen to the show, but we like it better when you like, share, subscribe, or feel free to leave a comment.
Be sure to like, subscribe, share, and tune in for more financial focus by visiting GulfCoastFinancial.net. The information presented on this program is provided for informational purposes only, without warranty of accuracy, completeness, or suitability for a particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature and not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes. John Kuykendall is registered with and securities are offered through Kovac Securities Inc., member FINRA SIPC, found online at www.kovacsecurities.com. Advisory services are offered through Gulf Coast Financial Services Inc., a registered investment advisor in Florida. Gulf Coast Financial Services Inc. is not affiliated with Kovac Securities Inc. or Kovac Advisors Inc. Past performance is not indicative of future results. All investing involves risk. Investment decisions should be based on your own goals, time horizon, and tolerance for risk. Due to various factors including changing market conditions and/or applicable laws, the content may no longer be reflective of current opinions or positions.